the printing press works until people say, why would we ever want to hold that dollar when the printing press is destroying its value and that of the bond market, when they can instead buy gold, which has outperformed the bond market, does not have that risk. In fact, the more they print only strengthens the price of gold. And not only that, doesn't have the sanction or confiscation or default risk. That's why we are seeing a floor under the price of gold and silver as the people in the West have their head up their rear end.
Yeah.
People in the West have been selling into this rally. Look at the ETFs. They're falling off at a 45-degree angle.
Yes.
They have been sleeping, chasing, this instant gratification isn't fast enough mentality that everyone has in NVIDIA and Bitcoin. They're not enamored with 9% per year compounding for the past 25 years that gold offers. They want it all and they want it now, just like Violet in Willy Wonka. I want it all, Daddy. I want it now.
Yeah.
Well, that's what
Yes.
it is.
Yeah.
That's exactly what it is. Instead of allowing time and compounding of time and markets to work, they're just biting off their want to, let's just gamble and I'll put it all into NVIDIA and I'll put it all into Bitcoin and let's get rich now. Well, that's going to have some serious problems. I think it is the opposite way of looking at things. So as the rest of the world, in particular, Chinese as an example, they continue to hit breakers on their ETFs on the upside. There's so much demand, they have to stop them as we're selling and selling metal into the rally as the central banks, the most well-informed traders in the world, forget about the wealthiest, which they are, they're most well-informed, buying more than they ever have in history over the last 3 years.
In the first quarter of 2024, central banks made their largest ever purchase of gold, surpassing previous records. Andy Schectman explains why this is significant. As the West devalues its currency through relentless money printing, central banks are turning to gold to preserve value. Unlike fiat currencies, gold offers a safeguard against inflation, sanctions, and confiscation risks. Despite this, Western investors are chasing quick profits in volatile assets like NVIDIA and Bitcoin, neglecting gold's consistent 9% annual compounding over the past 25 years. Meanwhile, the most informed and influential financial entities are stockpiling gold, indicating a massive shift in the global financial landscape. Schectman predicts that gold could be revalued to stabilize economies, with potential prices reaching $15,000 an ounce or higher. This revaluation, combined with blockchain technology, could tether new currency units to gold, creating a more stable financial system.
Q1 2024, the largest one-quarter purchase of metals by central banks in history, surpassing 2023 Q1. The biggest, most influential, wealthiest, and most well-informed traders on the globe are buying it like it's going out of style as the West is selling. There's a problem here. But if you look at that and say, well, if we believe the nonsense coming out of the Bureau of Labor Statistics, these idiots, they lie like hell. They just pulled coffee for this month. Coffee is taken out of the CPI. Because it's up 85% since September, 35% this year, right? They took it out, replaced it with tea. So the inflation is a lie. But if we believe it, if we were to believe it, which we shouldn't, the Bureau of Labor Statistics, pull the L out, should be the BS. But the BLS says that, okay, we have 3.2 or 3.4% inflation, but you can get 5.5% on a 6-month treasury. That's a positive real return.
Yeah.
That should kill the price of gold. We have a strong dollar. That should kill the price of gold. We have massive divestment out of the ETFs and physical market as being sold into the rally. That's kryptonite for gold, all those three together, and yet it continues to go higher and higher and higher and higher because the central banks and the rest of the world sees what's happening in the West. Our media doesn't just do a crappy job, they do no job of telling us what's happening. And that's why people can't get out of the way of what they don't see coming. And they are going to be smacked straight in the face by these changes. And how did that happen? Maybe people listening to you and me and others will have a fighting chance.
Yep.
The rest won't. Well, I'll tell you, the only way I think the Western nations get out of this debt spiral is by revaluing gold. And the interesting thing is, look, right over my shoulder, that's what Roosevelt did. He confiscated this is a $20 gold certificate. And instead of on a $20 bill where it says in God we trust, it says payable to the bearer on demand in gold coin. Here's a $20 gold coin. They were interchangeable, right?
Yes.
Well, he confiscated gold. He paid everyone $20.56. Back then, A nickel would buy you a dozen eggs. So 56 cents, that's a lot for your extra for your, but then he devalued the dollar and gold went up to $35 an ounce, a 40% increase in the value of gold. If you look at every balance sheet on central bank balance sheets, all of them, interestingly enough, do you know what the name of the account is where gold is held in on their balance sheet?
No.
The gold revaluation account, it's called. That is the name of it in every single central bank balance sheet. Now, here's how, and you even had just a few months ago, the head of the Dutch National Bank saying, we need to do this. We need to revalue the price of gold. And it would get us out of our debt spiral. Why? If you were to put gold at a really high number, let's say $15,000 an ounce, now your assets are going to offset your liabilities. Just like that, your balance sheet is made whole. Is it that crazy? No, I don't think it is that crazy. In fact, why else would the Bank of International Settlements reclassify gold as the world's only other tier one reserve asset? Why would all of these central banks, dozens of them, repatriate their gold from the Bank of England and the New York Fed? Why are the central banks buying gold at a rate the world has never, ever seen before? Why did Kristalina Georgieva, the head of the IMF, say a CBDC that is not pegged to something is just fiat? What would be the logical thing to peg it to? The only other tier one reserve asset. Why is this happening? Well, I'll tell you why, because I think they will put gold at a level that no one can imagine, maybe $15,000, $20,000 an ounce, and then they will use 10 or 20% of every new currency unit in circulation pegged to an ounce of gold, so that you still have monetary maneuverability if 80% is not pegged, but 20% is. But that 20% gives it a tether, so it can't float away the way that it always has with politicians' ambitions to inflate over austerity, the tough decisions. I really do believe that is what they will do, and it will be a marriage between blockchain technology and gold, because de Gaulle from France proved that convertible currencies convert. And he said, give us back all our gold. Here are your dollars. We don't want that. But if you have blockchain technology with gold that shows the veracity and the immutability and have it audited by independent auditors, you have a fighting chance. Yeah, you know, what Costco did is very impressive. To me, it is indicative of there being latent demand that people don't know about. My biggest issue with those people is what are they going to do when they want to sell it, because Costco won't buy it back.
They're not buying it.
Now you got to figure that one out. But yeah, there's demand out there. And look, I look at gold as wealth. That's why we started out this conversation. It's not about getting wealthy. It is wealth that has outlived everything the world's thrown at it. And yet it's relevant enough to where the central banks are buying it at a level no one's ever seen. And what are the central banks? The most well-informed people in the world, at least in terms of economic policy and the playbook. Like, for example, in 2017, after 6 years of the price of gold going down, it went straight up from 2000 to 2011, every year about 13% per year, and then went down from 11 to 17. In 2017, in the middle of a 6-year bear market, the Bundesbank, the Bank of Turkey, Hungary, Poland, Austria, Czech National Bank, Dutch National, they all said, give us back our gold. And then the next year, those same banks bought more as a group than they did in the 60 years previously combined in 2018. And then in 2019, those numbers were up 100%. And then, oh boy, coincidentally, the BIS said, by the way, you guys, gold is now the only other tier one reserve asset next to US dollars and treasuries. Oh, that was a coincidence, or was it? Do the central banks know the playbook? Abso-frickin-lutely they do. They know where this is going. They know what the next chapter is, and it will be a system that will be denominated, as Zoltan Pozsar calls it, by commodities and transparency. What is that? Gold and blockchain. Boom, boom, done. Tier one asset, massive accumulation, massive repatriation. Keep putting it together, and you will see that the old system of opaque debt instruments and promises by a broke entity, a terminally declining country, ain't going to be the way it works anymore. We don't want your promises. We don't want your debt instruments, especially if you're going to try and confiscate it from us and sanction us if we don't agree with things, because, you know, we don't agree with the way you're doing things. But yet, you know, that's Janet Yellen saying, China, you give any money to Russia, you can be friends, you give any money, we're going to their war machine, we're going to sanction you, your banks, and Beijing itself. But we can give $200 billion to the Ukraine because we're the world reserve currency. We're the United States. Not cool. And I think these are the ramifications. These are the consequences that are happening as a result of it. And that's why I say, is this too stupid to be stupid? I mean, is it really? Are they that dumb to not think it's going to piss everybody off and make them seek alternatives? And after you told them we're going green, which is the linchpin of the dollar hegemony, we don't need you, Saudi. Thank you for the memories, but we're going a different direction. Really? Are you that stupid?
Yeah.
So when you talk about and then letting the country fall apart, are you that stupid?
Yeah.
Open borders, elections, judicial system, on
Yeah.
and on and on. Really?
Thanks for watching. Let's recap the key points from today's discussion. Andy Schectman highlighted how relentless money printing in the West is devaluing currencies and driving central banks to make record-breaking purchases of gold as a safeguard. Unlike fiat currencies, gold offers protection against inflation, sanctions, and confiscation risks. While many Western investors chase quick profits in assets like Nvidia and Bitcoin, the most informed financial entities are stockpiling gold, hinting at a significant shift in the global financial landscape. Schectman predicts that gold could be revalued to stabilize economies, potentially reaching prices of $15,000 an ounce or higher. If you found this video informative, please give it a thumbs up, subscribe to our channel, and hit the bell icon so you never miss an update. We'd love to hear your thoughts, so share your opinions in the comments section below.